private equity space in Africa is in focus now. Michiel le Roux, investment executive at PSG Africa, joins us in studio. Michiel, great to have you with us today on the show. PSG Africa, of course, has just launched and initially formed to be the holding and parent company of CA Enterprises, which is a business that PSG has bought in Botswana. 300 million rand was the price tag there. Just give us a bit of a background to the formation of PSG Africa and how that fits into the overall PSG Group's plans.
Morning, Sam. At this stage, it's really just a division of PSG. It was formed as a holding company for CA Enterprises. CA Enterprises being a FMCG company based in Botswana. Very exciting acquisition for us. We really see some growth coming through there, not only from Botswana, but from the neighboring countries as well. We want to use the CA Enterprises and the great base and systems that they've built there that's geared towards Africa to expand into the rest of, shall we say, sub-equatorial Africa's FMCG markets, where we see some real exciting growth coming through in the next few years. So
what is really the mandate that PSG Africa has right now? What's the philosophy underpinning the type of investments that you're going to be making?
Maybe if I take a step back and we look at what excites us about Africa and what we are looking for in the African growth story. Not that I think we need to sell the African growth story to CNBC Africa, but the mandate where we're coming from is twofold. On the one side, we see global worries about food security and soaring food prices, and a large proportion of global available agricultural land is sitting on our continent. So with improving political climes, it's inevitable that there's going to be an agricultural boom. So on the one hand, we're really looking to focus ourselves agriculturally on the continent. On the other hand, if you take Africa as a whole, the consumer middle class is the size of India's, if you take it as one country. The difference, however, is that our consumer middle class on the continent is set to double over the next decade. So as people demand more luxury goods, as people demand more finance, more telecoms, more services, there's some great corporate opportunities going to pop up on the continent. So we're focusing ourselves twofold. On the one side on the agri-space, on the other side on the consumer-facing sectors.
Pretty much in line with where PSG is focused, perhaps in South Africa. Are you looking to have synergies across the type of investments that PSG has in South Africa, with Capitec being one of the gems in the whole PSG group, and then the acquisitions that you have in the continent?
There certainly are synergies. Most South African corporates, certainly the ones we're invested in, our portfolio companies, are very excited about Africa. They've all got their own Africa strategies. If I take a concrete example, Chayton Africa, where we've invested in Zambia, there's some possible linkages for Agricole, a seed company in South Africa, where we've just upped our stake. So there's some definite synergies. As we increase our footprint, as we increase our coverage of the continent, there's no doubt it's going to benefit our portfolio companies.
So let's look at the actual fund. Is there a size of the fund that you're targeting right now? Do you have limited partners that you've brought in, or is it being funded from within the group at the moment?
At this point, PSG Africa is 100% PSG.
100% PSG, and the type of returns that you're targeting, do you have any earmarks in terms of what you're looking at when you're looking at evaluating certain investments right now?
Absolutely. We've got an internal benchmark return of 25%, but you've got to realize that this is a long-term game and a vision that we're embarking on. So under no illusions that not every investment is going to yield that from day one. But that is the sort of returns we're going through. Obviously compensates for some additional risk that you're taking on if you're venturing into some countries.
Certainly a lot of risks, and very hard to evaluate the risks from just purely looking at the balance sheet. So how do you go about embarking on due diligence with all of the nuances that you have from a cultural perspective? Management is a big issue, skills are a big issue in Africa. Tell us about the due diligence process.
As you've alluded to, it starts right at the top. So you start by looking at the country. Every country north of our border is different. They've got their own regulatory regimes, their own tax regimes. So you've got to make sure that you're happy with that, and that you can engage with the government in the whole process of buying into the country. In terms of the risks itself, you have to make sure that the company you're investing in addresses some of the concerns that are Pan-African. If we look at things like infrastructure, how are you going to get your product from where you produce it to where the people are going to buy it, where you're going to get your electricity from? The portfolio company really needs to address those concerns, have a plan for that. Often good management is the answer to that. And the other thing is skills shortages. It's difficult to get good people to go and work in some places which people still see as quite frontier.
So when we're talking about misconceptions, perhaps there are many about doing business in Africa. Can you tell us about some of the experiences you've had where there's been a very attractive company perhaps that you're looking at from a balance sheet perspective, and you go into the market and it's a completely different story?
Yeah, well, I mean, we don't just get on a jet the moment we see some sort of balance sheet come over our table. So we do some initial due diligence out of Joburg before we go over there. I don't think I'm going to name any names, but we've had situations where you get to a certain place and whatever you've seen on paper is quite different to what you see in reality. And I don't think you should ever really get too excited about the photo on the front of a presentation that's usually taken from the best angle in the country.
So what market are you hopping onto a plane and going to visit next? Which markets excite you at the moment, where you're looking at the best opportunities?
Clearly, Botswana and Zambia are incredible growth for us. Zambia, from an agricultural point of view, is just brilliant. The soil's great, the weather is great, the rainfall is ample. So there are great opportunities in Zambia. There, you don't really need to venture too far. Our immediate neighbours present a lot of opportunities, but then you've got the East African community trying to harmonise their regulations across the board and create a single market, which is going to open up a lot of investment opportunities at the same time. And in West Africa, you've got the giant of Nigeria stirring. So it is there's quite a lot on offer. At the moment, we're prioritising our immediate neighbours.
Certainly the giant of Nigeria is stirring. It's one of the fastest growing economies in the world, could overtake South Africa as the largest economy in Africa. What are the plans for PSG Africa from a longer term perspective? Do you have, in terms of listing perhaps, we know that has been a strategy of PSG in South Africa. What are you looking at in terms of the fund?
At the moment, we're well capitalised and we don't have any immediate funding requirements. Should it become an issue, it's definitely an option to list PSG Africa as an African entity with exposure into the continent, but no definite decision has been taken in that regard.
Possibly listing, the last question for you, is there another deal that's going to be announced in the next month or so?
I think you should watch the space, but these things do take time. We've just taken on 2 very large acquisitions that are very exciting. We could definitely branch out through those particular acquisitions, so we don't really at this stage need to take on more deals, but there's certainly a lot on offer at the moment.